Yesterday, Fed announced the rate cut as expected, 25 basis points. I kind of read through the comments in the written script. There wasn't a lot of major changes to that, but other than the one part about potentially buying more bonds. And of course, there's the big debate right now. Is it QE? Is it not QE?
Like you mentioned, they made almost no changes to the statement. That was a surprise. So the market was going into this expecting what they're calling a hawkish cut. They were going to cut rates and then start talking a little more hawkishly and possibly raising possibility that they may raise rates in the future because inflation is still stuck around 3%. The fact that the statement was basically unchanged except for the QE tells me that the Fed's stance is pretty much where it was 6 weeks ago, which no one considered a hawkish cut. Then you get to Chairman Powell's speech. He was more dovish than he was at the last meeting 6 weeks ago. So for starters, he said the unemployment, the rate of growth, which based on the BLS, we think is growing about, because we haven't had numbers in ages, about 40,000 a month. He said it's really minus 20,000 a month. So the Fed thinks that there's job shrinkage right now, and ADP certainly confirms that. The other interesting thing he said is that inflation, without the excess inflation due to tariffs, is 2%. So he's blaming the difference between 3 and 2% on tariffs. He has always talked about tariffs and the risk that they become persistent inflation. The word persistent didn't come up yesterday. So he kind of paraphrased it as the old transitory word, which is probably not a word he wants to use again, but that we're going to get a bump in prices. And he said this, certain goods are going up in price. But once they go up in price, they're not going up again. The tariff is a one-time hit. So in the chairman's mind, he thinks we're losing 20,000 jobs a month and that inflation is 2%, except for tariffs, whose effect will be going away very shortly. The other thing is that there were 3 dissents. One voted to cut rates by 50, 2 voted to abstain. As we get into next year, we have 2 new Fed voting members, which are hawkish. So what's 3 today could be 5. So I think that unto itself was on the margin more dovish.
The Augur FOMC statement analysis, they look at each one of the statements and then they rank it whether it's more hawkish or more dovish. And according to Augur, this was the most dovish statement from the Fed since 2021.
What the market hasn't really digested yet was they were expecting a hawkish cut and you got a more dovish cut. That's a big difference. They said that growth is going to be decently stronger, but they lowered their inflation forecast by 0.1% from where they had it in September. So again, on the margin, a little more dovish.
Catch me daily on The Real Investment Show. The link is in the description.